Welcome back to Property Now, where we are on a mission to make you the property pro in your group chat. And welcome to part one of our two-part holiday special series. If you're listening and not watching, I've got my Santa hat on. I'm feeling the festive spirit, as were the rest of the guys today as we had our chat. In today's episode, we talk about what we saw in the property market in 2023, the big headlines, the big news, and what we're taking from 2023 as we head into 2024. We hope you enjoy the conversation today. Make sure you subscribe to and follow Property Now. So, guys, as part one of our holiday special, we are going to wind the clock back.
So
You right?
I might have hay fever, so I'm just sorry. I'm cool.
Oh, shit.
I'm good.
You good?
Sorry.
Okay.
Sorry to do that.
Don't be sorry. Don't be sorry.
All right.
Me.
Sorry, Paige. Sorry, Paige.
Sound check, mic check.
Testing 1 2 1 2. Anyway,
If you need to take a medication break, that's cool. You do that.
that was me
You're the
episode one.
boss.
Blowing on it, going over there to blame on us. Oh,
Yeah, that was
classic
beautiful.
episode.
We've gone through some ailments
Yeah.
in this show already.
Yep.
All right, guys. So yeah, today, part one of our two-part holiday special episodes, we are going to look back at the year of 2023 in property and talk about what we saw in the property market, what we saw in the economy. I kind of want to hear from you guys. I don't want to prompt you too much. I want to know what were your big, what were the big headlines, I guess, if you had to kind of wrap up 2023 with a bow, like a present. What would you say?
Thanks for having us back, Zaz, and I've got to say hats off to us coming in during our holiday break to record these episodes.
Hats on.
And speaking of hats, if you're not watching, if you're listening on Spotify, Apple, wherever you listen,
Have a look.
check out YouTube because we're wearing some Christmas hats. I'm not going to lie. It's pretty funny.
And elves.
And elves hat. Well, elf.
That's still Christmas.
It's still Christmas.
Still Christmas.
It
Yep.
is very on theme.
Yep. I don't know how we found hats big enough to fit our heads, Jace, but we did.
I don't know if you
I
can
don't
call
know
this a
if it fits,
fit.
Jace.
It's like a slightly...
It's sitting on my head.
It's fashion forward, I would say.
Yeah,
It's
yeah,
like
it's
a
actually
little
looks good.
slanted.
Thank you.
Yeah,
Thank
it's
you. Thanks,
nice.
guys.
It's working.
I appreciate it.
Rocking it.
Yeah.
So, Michael, do you want to kick that off then? You know,
So mu-
2023,
yeah.
what's your big sort of headline from the year in property?
It's hard to break it down. Like, it's been a big year, and it's hard to believe that the year's already over. I don't know where this conversation is going to go, so I've been really excited about having it. But I think that if I wind it all the way back to the start of the year, I have this memory of, like, all the banks telling us that property prices were going to, like, drop dramatically and, like, it was going to be a terrible year and interest rates were going up and everyone was going to fall off a mortgage cliff. And then, like, fast forward 12 months and, like, none of that happened. Prices continuing, like, prices have actually slowly risen each month.
Just on that as well, like there was a 5.6% growth rate in residential property this year.
Is that
in
across
2023.
Australia or was that New South Wales?
Across
Do you know?
Australia.
That was across Australia, yeah.
That was as of October this year.
So everyone was telling us 10, 15, 20%, 25% corrections, and it just didn't happen. So I guess the advice is don't listen to the predictions because you just really never know. But that's what I take from the year. You know, everyone was battening down the hatches and scared about what might happen, and it was all doom and gloom for property. And here we are still kind of going strong. So that was the biggest takeaway for me from the year, I think, if I look at it all from start to finish. Chris, what do you reckon?
Yeah, I mean, the best word that I can describe it is patchy.
Yeah.
It's really patchy. There's been some... I mean, obviously with what we do here at Composite, talking on the development... I'll touch in on the development side of things.
Yeah.
That's where the patchiness comes from. So not on the existing property. I'll let Jace, you can dig into that maybe. But the development side of things has been extremely patchy. We've seen interest rate rises, which has made it very difficult to get projects out of the ground. We've seen builders go under midway through projects, and that's then caused even more heartache for developers to get projects out of the ground, and purchasers who may have bought into projects and uncertainty about whether they're going to get delivered. So, you know, that's across the eastern seaboard in terms of the patchiness and been very, very difficult. But then there's been some really great projects and moments where they've been able to get out of the ground and able to get commenced, and we've seen that firsthand with what we do here at Composite. It's very hard to describe this year, and I think there has been quite a bit of pain, particularly in the development and construction side of things. I think we've all still reeling from the impact of interest rate rises and the impact of construction costs increasing substantially, and the availability of labour being very, very difficult. We're seeing that in the development space. So the world of property in 2023, the best way to describe it from my perspective has been very, very patchy. But we're seeing green shoots coming out, and that's what we look forward to. But yeah, the year that was a very difficult one, I would say.
It's almost the year of existing property versus the year of new property as well, because I know, so for my own, I always think about my own neighbourhood, right? And when I first bought into my neighbourhood, one of the things that attracted me to the area was driving around, you never saw any for sale signs. There was never anything for sale. There was like one or two at most, right? And that to me was a great sign, because it was an area that a lot of people wanted to live in and wanted to be in, but there was never anything for sale. So it was very hard to get in, which means prices are going to be strong. And that's what attracted me to the area, right? We made that decision, my wife and I, because we thought, okay, this asset is always going to be good and it's always going to grow. But now I drive around and there's more signs than usual popping up. Towards the back end of this year, and then I drive around other areas and I see, parts of like southwestern Sydney where I've got family, or I drive around Summer Hill near our work, and there's a lot of for sale signs up. There's a lot of old, like existing stock for sale. So we're seeing things come onto the market, and it's probably a mixture. I put that down to a couple of reasons. We had 5 interest rate rises this year. It was part of 13 interest rate rises in a row. So if there are people feeling pain, they probably had to sell. So that's probably a small part of it. But I also think that we saw such a great boom in property during COVID period that I think a lot of people actually are seeing an opportunity to cash out.
But it must be days on market as well is increasing, right? If you're seeing the signboards up consistently, they're coming on. So maybe back in the day they were coming on and selling pretty quick. Yeah. But now they're coming on and they're staying on the market for an extended period of time, 60, 80, maybe even 90 days.
I have a little stat on that as well, actually, just in terms of, because that was a trend, I think, of the year. There was a surge in new listings, property, like residential housing prices went up. Little stat, and maybe you guys can give more context to this, because I'm just going to chuck a stat at you with zero context. The majority of residential homes across Australia take approximately 30 days to sell, with 10.2% more properties on the market across Australia this year versus 2022.
30 days seems about right, because a traditional
that sounds short to me. Is that short?
A traditional marketing campaign for property is 4 weeks. Yeah, okay. So that's 28 days. Yeah. Is that correct, Mavs?
Could be 4 weeks in the auction in the 5th, or it could be a 3-year campaign in the auction in the 4th, depending.
So 30 days is actually quite good. But I've actually seen a little bit of, and again, this is just my own sort of what I'm noticing. I've seen properties come on the market, get taken off the market, and then come back on the market. So potentially, I think there's been a little bit of, things grew astronomically during COVID. People trying to cash out, maybe not getting the crazy price they're expecting, and then coming off and trying again.
The vendor expectations.
Yeah, so the I think during COVID especially, or during that period, it was very much a seller's market. We all know that people were getting ridiculous prices. FOMO was all over the newspaper headlines. You haven't seen FOMO in headlines this year in property. There's no FOMO anymore. There's actually less people out there.
The story hasn't been about existing property.
That's right.
The story's been about new supply, and we've seen that.
And that's the thing, yeah.
It could be affected by borrowing capacities.
For sure. Could be a major one. Yeah, absolutely. Yeah, especially with the interest rate increases. I think 2023, like Michael mentioned, 5 times, 1.25%, with a cash rate 4.35% now. And also impacting on repayments. So that's roughly about, for the average, I think $600,000 loan size, about an extra $460 a month. Yeah. Right. That's coming out of the pocket. Now that's in addition to all the rate increases from 2022. And that's also now reducing your borrowing capacity. So every time the rates go up, your borrowing capacity goes down, right? Even though there's no changes to your particular situation. And I think another aspect of it is the banks review their minimum living expenses. So with inflation going up, the banks are not going to use the same minimum living expenses from 2022. It's all adjusted for inflation. It's all gone up.
That's actually a really interesting point. Because not only is your borrowing capacity reduced, but is it the HEM side of things has also gone up because of inflation?
Yeah, so that further reduces your borrowing capacity. So, for example, if you had a pre-approval in place, and it's been going on for a while, every time there's an interest rate increase, or every time the bank increases their assessment of what the minimum living expenses are based on, you know, the data, your borrowing capacity is coming down. So without you doing anything, your financial situation hasn't changed. You're borrowing less and less money.
So you're getting
every
whacked
time.
twice.
Yeah, 100%,
on the borrowing
right?
side
And
of
then
things.
it's harder to save for the deposit. So your borrowing capacity is coming down, your deposit's not going up, right? So your budget gets affected. So that could be why it's taking longer to sell a property, or there's not as many buyers out there. Like there's no more FOMO.
So the capacity is harder.
So 2023 has been like sort of a holding pattern for a lot of buyers and investors. Like I know a lot
Oh,
of people,
yeah.
I know a lot of people that, and these are the common stories that I hear. So, oh yeah, we're going to upsize or buy an investment property this year, but then we went to relook at what we could borrow and it just didn't stack up compared to 2022. So we've had to put that on hold.
Yeah.
Myself personally, we wanted to renovate, but you know, to be able to redraw, to use like with inflation, like it hasn't been something that we were able to do in 2023. So maybe that gets pushed back. I'm hearing a lot of stories like that, people putting plans on hold in 2023, and that's kind of been the property story.
That's interesting though, because that's on the consumer side, so the everyday person putting their plans on hold.
Yep.
On the development front,
Also,
we've had developers
correct.
putting their plans on hold. You know, we've had some large projects that are wanting to onboard in the pipeline. We're looking to onboard in February of this year, and then they've had to push the launch back, and that's pushing into May, and then pushing into September. Now those same large projects are pushing into the new year, purely because it's very difficult to get them up and running. And, you know, it's only been made more difficult by the interest rate rises, which increase the cost on development sites and feasibilities, makes it harder. And then we've also seen the construction increases, which makes it even harder. So we're now starting to see a leveling out of construction costs. Availability of labour is still difficult.
Yeah.
But that's what the year of 2023 has been in the development world. And getting new supply into the market has been very challenging. And that's why it's been the headlines throughout the year, whether it's government talking about it or what stuff that Housing Australia is doing, which is the federal government sort of housing body, from community housing providers all the way out to developers talking about this housing supply issue and how difficult it is to get projects bloody out of the ground.
If you're enjoying what you're hearing so far today, make sure you check us out on our socials, where we share behind the scenes content, exclusive takes and deep dives into topics that you might not hear us talk about in the full episode.
You've hit the nail on the head, Chris. The biggest headline for 23 has been about supply or lack thereof. And so you listening out there might be thinking, oh, hold on, you just said like there's more for sale signs than usual. So doesn't that mean there's more supply? But that is being grossly outweighed by the lack of new homes being built, the lack of new apartment buildings being built. So what we've seen at Coposit in our business is that, you know, typically projects launch in February and September. They're like big seasons for launching projects. But we've seen developers holding off on releasing new land, on starting construction on new buildings, because their lending capabilities are different. B, it's not a great time to be selling because like sales across the board have slowed down a little bit for personal reasons as well. So we're seeing less new homes being built, things being pushed back. So the supply issue has been massive. And it's probably the thing that has kept prices up. So at the very start when we said, okay, banks are predicting, you know, property prices will drop dramatically, the supply issue is the thing that's probably kept it rising slowly.
There's just no certainty. So just as the everyday person is feeling that there's no certainty when they go to the grocery store on prices, developers are feeling the same way, that there's no certainty, you know, that the feasibility that they've got, that they've put in place, that they've done their numbers on, there's no certainty, and there never is full certainty, but, you know, where the environment is at the moment, there's no certainty that the numbers that you've put down or that you've estimated into your feasibility are going to be met. And so then, you know, when you're talking large sums of money at risk at any one point in time, then sometimes the safer option is to shelve the project and hold on. But the question is, and this is a question for 2024 and beyond, is how long can developers keep holding on to some of these sites? You know, how leveraged are some of these developers? How exposed are they to the market? You know, there's a lot of solid developers out there, but are there projects that need to get out of the ground physically because they need to get the cash out of those sites and get that moving forward? So that's a really interesting point that I think is going to make the stories for 2024.
So Chris, on
I'm
that,
just losing it thinking about all this like insightful stuff Chris is saying.
It's hard
and
to
then
take
looking
him
at with an
seriously.
elf hat
I'm
on.
trying to close my eyes and listen.
I'm like trying so hard.
The worst part is, as I'm talking, there's a bell.
Jingling.
I don't even know I can hear.
The
I'm so sorry to cut you off, Jax.
The worst part is our shorts are going to be limited to
I
this
know.
Christmas period. We're not going to be able to use Chris saying those insightful things wearing an elf's hat in March,
I love
unfortunately.
it. I love it. I'm sorry. Back to
We
Jason.
yeah, so the question I was thinking, Chris, with what you're talking about, with the interest rates going up, affecting the developers' feasibility, projects getting off the ground. Yeah, so if we put housing affordability and supply aside, do you think that's the intention of the RBA increasing rates because that'll affect the activity in the economy, so hopefully bring the inflation back down if they can slow that construction sector?
Yeah, look, absolutely. I mean, it's designed to slow things down, so there's no demand for goods and services, which therefore brings inflation down. Absolutely, it's designed for that. But then there's this, so that you got that inflation story, but then there's this housing story playing out. That's just can be devastating from a home ownership point of view, from a rental crisis point of view, and then ultimately what it's going to lead to is a homelessness crisis where people can't afford to buy, can't afford to rent because there's no new supply. Then we're going to head into a homelessness crisis. That's the biggest issue that we face. So you've got two battles that are very hard to fight concurrently when you're trying to fight inflation and the housing supply issue, but they have to, and that's what will happen.
The other big issue that has caught headlines has been rent, the rental crisis, which you've just touched on as well. So we saw, again, we mentioned during COVID, property prices went crazy. And then a year, 18 months later, rental prices, the price of rent did the same sort of thing. So we're seeing people were seeing rent like $200, $300, $400 a month increases in their rentals. And a lot of that was probably, the headlines are, the greedy landlords who all of a sudden their mortgages are higher. So they're putting that back on to their tenants, probably unfairly, to be honest with you. But that was a massive story because all of a sudden, you're seeing 50 people lining up outside to walk through a potential rental. You're seeing rental prices increase, people wondering how they're going to be able to do it. It was a huge story in 2023.
But Michael, you say unfairly, right?
Well,
but given the fact that there's 50 people waiting to inspect the home
Supply,
and
demand,
this and that, right? Where do you draw the line?
It's got to be a free market.
Is
right?
$50 fair? Is $51 not fair in terms of increase? So, but I did see a lot of that, those type of conversations, right? And I do think it's that during COVID, rents were reduced.
Yeah.
Right. So when the recovery came through, the rent didn't just go back to where it was before COVID. It went even further because it hasn't been increased for the last couple of years of COVID. On my hat's falling
That's a
off,
great
man.
point.
Yeah.
Yeah.
Right. So
You should get a string.
yeah, could you stick it on? Right. So then it's like that $200, $250 increase, like the impact of it is massive.
Feels worse.
Yeah, but your rent hasn't moved for 3 years, right? Maybe normally it would have gone up $50 a year, for example, and you also didn't have that demand, right?
It's actually a great point.
Yeah, but I'm not saying
Spoken like a true landlord.
I'm gonna get cancelled too,
No, I'm a renter, and I'm like, oh, yeah, that makes sense.
right? Yeah, so it's
Jay
like-
certainly moved rents up 60%.
But I think when the landlord is increasing the rent and the tenant is trying to negotiate, I think that's where you can maybe work out some more compassionate, middle ground, right? That the tenant's been great.
But you don't know both sides of the story.
Correct.
So I've seen situations where, there's a house 2 doors down from me this year. There were renters there. So I knew the people renting there because they were 2 doors down from me. I knew the people that owned it as well because they used to live there. They jacked the rent up. So all of a sudden they're moving out. The renters are moving out. I'm like, oh, what happened? Oh, they put our prices up $300 a month.
Yeah.
It's just not reasonable for us. So then they moved out, and then the house goes up for sale a couple of weeks later. So
Right.
what happened was, in my theory is, the owners, their mortgage has gone up. They can't really afford it anymore.
Yeah,
so
yeah.
they need to jack up the rent. They can't pay that anymore.
Yeah.
Or they need to sell. So there's probably situations like that as well.
Yeah,
So
yeah, that's right. And I think the ones that give the renters a lot of grief are the ones that don't repair the property.
Yeah.
There's mold in the house, and then you increase the rent by $300 a week.
What am I paying for?
You hear some horror stories.
Right,
Yeah.
don't fix the aircon. That's bad. right?
Yeah.
So,
I've
but
got
definitely
some rental
there's
horror stories.
there's
Story
heaps
for
on
another
TikTok.
day.
That's
at
an
the moment.
episode for
Yeah.
another day, maybe.
Yeah, but definitely to your point, there's two sides to the story.
Always
as well.
is.
Yeah,
Always
100%.
is. We're also seeing another thing that we've seen this year as well in at Coposit is less first home buyers entering the market.
Oh yeah, for sure.
So that's definitely dropped.
Yeah.
So a lot of buyers at the moment are, owner occupiers. Investors are still around. Downsizers are certainly still around. FURB buyers are still around. I think FURB buyers make up 10% of the
Wait,
market in
FURB
2023.
buyers?
What's that?
Like-
Purchasing.
FIRB.
So overseas, what does that actually stand for?
They call them FIRB buyers. I mean, the FIRB stands for Foreign Investment Review Board,
Yep.
which is where they go to get approved to make their investment.
Oh,
But it's just a foreign buyer.
So it's foreign buyers.
Gotcha.
So that's 10% of those. But I think first home buyers, according to, I was reading like a study from NAB, and they're saying that first home buyers made up 30% of the market this year, which
That's
is
still quite good.
Which is still okay. I actually thought that
what's
was
the
okay.
What's normal? Is there a normal?
It depends on. It honestly depends on the time.
But that's lower than what we would normally
That
see?
it was quoted. It didn't say what that normally is, right?
Right.
So I don't know what that normally is,
Right.
but I assume it's like closer to 40. I would assume anyway. Don't
Yeah,
quote me
okay.
on that. But they're saying that was low. So
Gotcha.
and we've certainly seen, obviously, and you're talking about affordability earlier, Mr. Mortgage Man, Jace. But but obviously first home buyers priced out, can't afford repayments anymore.
Yeah.
Unable to get and this goes back to again, maybe the plans for first home buyers to get in 23 that had to be delayed to 24, or even 25. So
Yeah,
massive one.
absolutely. We saw heaps of first home buyers enter the market in 2022.
Yeah.
There was a combination of factors: low interest rates, which meant greater borrowing capacity
Yep.
compared to today.
Yeah.
The government schemes around 5% deposits, right, where the government is your guarantor, so you didn't have to pay lender's mortgage insurance. That played a big part. So those two combinations of higher borrowing capacity, lower deposit requirement, meant more first home buyers could enter the market, and the interest rates were, on the average of a variable rate, was 2-point-something%. So the reasons made sense compared to the rent that they were paying. So first home buyers was flooding the market. But as the rates went up, borrowing capacity started reducing. So even though you had that sort of assistance with the government around the deposit side of things, if you couldn't get the borrowing capacity, the assistance for deposit didn't help you. Right, so that became a bit of an issue, and the uncertainty that you guys are talking about. So if you're a first home buyer, it's a massive decision, massive commitment. The rates keep rising, so you think, I can afford it today at today's rates. Fixed rates are, let's say, at 4 or 5% now, back then, or is it going to keep going up? Right, what about the variable rate? Is that going to keep going up? So if I go and make a massive decision, purchase a property, which we can manage comfortably, but I don't know if we can manage it if it continues to go up every month, right? So those sort of thoughts and issues are going to delay the person buying. But what happens is that the market keeps going up, right?
Becomes harder and harder.
Correct. So the more you wait, or some people thinking, I'll just wait for the fixed rate cliff and all these people to fall off, and they're going to have to sell their properties because they can't manage their variable rate repayments, which didn't really happen. And properties continue to go up.
The uncertainty is massive.
Yeah.
And because if you read social media comments at the moment related to property, there's a lot of doom and gloom. There's a lot of people predicting like massive crashes and like this is a Ponzi and it's going to fall over. So if you're reading that and you're about to
Saying
get
that for 20
they've been
years.
saying it for decades, right? But what I'm saying is, you're a first home buyer, you're going, man, this is pretty expensive. Can I do this? Okay, all these people are saying it's going to die. But on the other hand, it's actually been growing forever, for longer than I've been alive.
Yeah.
So what is the right decision? It would be such a confusing time.
It is tough, but I think that's the good thing. That's the great story that we've seen in 2023 is the home ownership aspirations are still there.
Yes.
So they haven't given up.
Yeah.
I know that there's probably headlines and you're seeing comments that it's too hard, but people haven't given up. And my message is don't give up. Keep going. The aspiration is the number one point that you need to have before getting into home ownership.
100%.
Before you start deciding that to save for that deposit or getting some more, you need the aspirations, but don't lose that because it can be done. We're seeing it being done on a regular basis. 30% of the market is buying this year. That's the success story. So to me, that's the message that I want to send is 2023 has been difficult. It's been patchy, but don't give up that home ownership aspiration. That's the most important.
I think a key theme we bring up a lot as well is that, like, you know, the headlines, the social media stuff can sometimes be very doom and gloom. So it's like, if you are a first home buyer and you're looking to, you know, make 2024 the year you get into property, don't read into the media headlines. Don't read into the scare tactics. Like, take it with a grain of salt, like we do.
Yeah.
But do your research and remain optimistic that you know,
Speak
you
to the
can do it.
professionals.
We see it happen.
And have conversations like this.
Speak to people that have
Like
done
that's
it before.
that's the point
Yeah.
of the show, and maybe a great segue to part 2.
I think it is a great segue to part 2. So guys, before we like wrap up, you know, 2023, any like final last thoughts, one word to describe it? I mean, we've said it was unexpected, things that people predicted, with prices going down, didn't happen, prices went up. Any sort of final thoughts to end us off with?
We got to the end. We did it.
We did
Made
it.
it.
Another year. Woo!
We didn't get cancelled.
We didn't get cancelled.
We get cancelled. Episode 7. Woo! And we're still going. That's amazing. Okay. Thanks, guys.
Thank you.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.